Stocks close sharply lower on Wall Street. The Dow Jones turns negative for 2023 as the 10-year Treasury yield surged to a fresh 16-year high. Stronger than expected jobs data also raises concerns of additional rate hikes by the Federal Reserve to slow down the economy. Stocks in the Asia-Pacific open lower on a weak handover from Wall Street. The GIFT Nifty is also indicating a gap down start for the Indian markets. Oil prices pared some losses after profit booking at the start of the week. Brent crude climbs off a 3-week low to trade around $91 a barrel. The RBI Monetary Policy Committee meeting gets underway today with the policy decision due on Friday. The CNBC TV18 Citizens MPC predicts the committee will hold rates, while the majority also expects no change in stance. And in key stocks to watch, HDFC Bank announces a major management rejig, appoints new heads for its retail and mortgage businesses, also appoints a new CEO for digital functions. And additionally, the Abu Dhabi-based international holdings company has increased its stake in Adani Enterprises to over 5%. This after the IHC entered a pact with a buyer to dispose of its investments in two Adani Group companies, Adani Green and Adani Energy Solutions, last week. It's midweek trading. The Nifty is fighting to hold 19,500 and global cues are extremely weak. Hello and welcome to Power Breakfast in the Mumbai newsroom. I am Hormuz Fatakia. But first up, let's take a look at the Asian markets. And it's not a very good start in the Asia Pacific as well, considering how Wall Street ended last night. The Taiwan index is down 1.5%. The Hang Seng is down 1.2%. It's a weak start there as well. Japanese markets were also down almost 1.5% when we last checked. The Japanese markets are also in focus because of the yen falling to as low as 150 against the dollar, sparking some intervention from the Bank of Japan, which the ministry has denied so far. But let's take a look at how Wall Street ended last night. And that was also not a very good session as well, because they ended Tuesday's session with deep cuts. The Dow Jones ended over 400 points lower, turning negative for 2023. The S&P 500 also fell almost 1.5%, while the Nasdaq, led mainly by the growth stocks, down 1.9% as well. And that was because of the Treasury yields, the 10-year Treasury yields hitting a fresh high, and they remain at their highest level since 2007. The markets also reacted very strongly to labor data, which also fueled concerns that the US Federal Reserve may have to hold interest rates at much higher levels for a prolonged period of time. A data point that I need to add is that the S&P 500 is now just 30 points away from its 20-day moving average, a level that it has not breached for the last 137 trading sessions. Now, staying with the U.S. markets, let's listen into some important commentary coming in from Aditya Bhave of Bank of America and Stephen Wheating of Citi Global Wealth Management on the likelihood of a recession in the U.S.
We're now forecasting a soft landing for the U.S. economy. We still do see a material slowdown in growth from the current pace. We have it at 0.7% next year, which is pretty close to a recession, but it's not quite a recession. And a couple of things led us to change our outlook. The first one is the resilience in consumer spending, and the second is the upside surprises in business investment, along with this idea that the recessions have really rolled across the most rate-sensitive sectors of the economy, with autos being hit first, then housing, and now those rate-sensitive sectors sort of finding a bottom at this point.
I would not look for a period that's going to conform to a traditional recession, sort of a collapse in everything all at once. We think that we've been going through rolling recessions and that will extend particularly to employment in the coming year. But this is not going to be a collapse in the traditional sense. We've had a 21% decline in residential construction investment thus far. Manufacturing is contracted for a full year, so is trade. So it's asynchronous. We'll have slowing in the services sector, which has just been rebounding from COVID to new highs. These are things that, again, will be quite material, especially for employment. But in the end, we don't think that this is going to show up as a period of just a drastic rise in unemployment and a full year decline in GDP.
That was the global market action, and it does not look good at all. But how will these overnight cues impact the Indian markets? We have our team of researchers at CNBC TV 18 joining in with the trade setup and the stocks that are likely to be in the news. First up, we have Vivek Iyer, who's joining in to get us all the market cues we need to watch out for today. Good morning, Vivek. What do you have for us?
Well, good morning. Like you mentioned, the overnight setup as well as the kind of cues that we're seeing from Asian markets and markets that have opened earlier than us indicate a very muted start for our own markets. It'll be important to see whether the Nifty breaches key technical levels in today's trading session. But, just revising, what we've heard so far as global markets are concerned. Dow Jones has turned negative for 2023. Yesterday, a steep sell-off. All U.S. indices lower between 1.3 to 1.9%. Also, significant selling pressure seen over there. The VIX also saw significant rise in yesterday's trading session. Oil prices, yesterday rebounded from the 3-week lows. Brent futures now trading closer to the $90.6 a barrel mark. Indian markets, yesterday's trading session, in tandem with the global markets, did see quite a bit of a sell-off. However, Nifty managed to hold on to the 19,500 range. Now, frontline indices ended with cuts, but actually, the broader end of the markets held up quite well and, in fact, managed to close in the green. Metal and auto stocks were among the top drags in yesterday's trading session. Some of the important events to keep an eye out for. Remember, there's a new listing today. Updater services will, make its debut on the exchanges. Apart from that, some of the other IPOs, so Plaza Wires, Valiant Labs, all of these IPOs have seen strong subscription despite the kind of volatility we've seen in the markets. Apart from that, the GIFT Nifty is indicating a slightly muted start for our own markets.
It is indicating a slightly muted start. Thanks for that, Vivek. The one thing that I need to highlight here is that 19,500 is where the Nifty is right now. It's almost like a make or break level because it has not closed below that level since the 1st of September. Now over to Surbi, who will list out the stocks to watch out for in today's trading session. Morning, Surbi. I'm sure you have a very long list with you today.
That's right. It's a long list. So let's start with IDFC First Bank. The CNBC TV 18 news break is confirmed. IDFC First Bank launches its first QIP to raise up to 3,000 crores. The base size will be 2,000 crores and a green shoe option is available of 1,000 crores. The indicative issue price is of 90 rupees per share, which is a 4% discount. Next is HDFC Bank. That will be on our radar on the back of a rejig in their top management. A slew of Q2 business updates coming in. Avenue Supermart standalone revenue from operations is at 12,300 crores. V-Mart, the total revenues were up 8% at 550 odd crores. Bajaj Finance, the new loans booked in Q2 were up 26% on a year-on-year basis, and the deposits booked were up 39%. Bank of Maharashtra deposits were up 22% and gross advances were up 24%. RVNL, the company emerges as the lowest bidder for a project worth 445 crores, and some other companies which will be on our radar on the back of some Q2 updates will be South Indian Bank, CSB Bank, Yes Bank, Vedanta and APL Apollo Tubes.
Plenty of stocks there. Thanks a lot, Surbi, for joining in, and we'll keep an eye out on all of these stocks. And lastly, now we join in by Nigel D'Souza, who is with us for the FNO setup of the day. Morning, Nigel. Too many negatives to ignore. What do you have for us?
Well, almost good to see you in on Power Breakfast, and look forward to more of the same. Well, yeah, too many negatives to ignore. Actually, if you're looking at the global setup, it's a little bit muddled. It's giving you a little bit of an uncomfortable feeling actually in the near future. Now, yesterday, what happened? We ended lower. There appeared there was some shorting on the Nifty because the open interest was high and we had the Nifty that was lower. But on the Nifty Bank, there was some unwinding of long positions. What did the FIs do, though? The FIs, they continue to add short positions, and now their short positioning has gone up to around the mid-70s or to around 76% or thereabouts. And gradually from the start of the series, we're only 3 sessions in, but the short positioning has gradually been moving up, and it's now at around 85,000 contracts odd. And this is the matter of just 3 sessions. Well, let's focus on the options data. The 19,600, the 550 call, both of them were fairly active. So on the 19,600 call, at the start of the day, the premium was around 100 rupees. So you add that 100 to around 19,600, you get 19,700, which is a bit of a resistance zone. Also, the 19,550 call, that as well saw a good amount of open interest build up yesterday, and the premium at the start was around 150 rupees. So that's telling you this 19,650, 19,700, that's going to be an important resistance zone. On the downside, though, I'm going to be looking at the 19,450. I was hearing what you had to say, and yes, we're going to be starting below that level, but on a closing basis, I think the bulls will want to try to defend that mark. We saw 19,500 put that as the highest open interest. Premium was roughly around 50 rupees. That ended at around 30 rupees. So keep an eye out on that front. But the Nifty Bank, that could be the swing factor today. The IT index could be a little bit under the weather going by what happened on the NASDAQ. So we'll have to keep an eye out on that front. The resistance is at around 44,800, while on the downside, the recent low of around 44,000 should be a level that you're looking at. GIFT 50 suggests a pullback on a closing basis. You like to look at around the 19,450 and also keep an eye out on the Nifty Bank. Back to you.
19,500 and 19,450, the two levels to watch out for. Thank you so much for that, Nigel. We'll keep an eye out on both these levels. Let's slip into a break now. Up next, HDFC Bank rejigs its top management after the merger with HDFC. We get you all the details right after the short break. Stay tuned. Welcome back. You're watching Power Breakfast right here on CNBC TV 18. The Asian markets continue to remain lower, and the GIFT Nifty is now indicating a further gap down start to the markets. There you can see the GIFT Nifty 129 points as an implied open, 129 points lower. But onto the big index heavyweight, HDFC Bank is revamping some parts of its top management 3 months after its mega merger with HDFC. This, according to sources who say that the bank detailed their changes in a memo to employees late on Sunday. Ritu Singh is here with the details. Ritu, take us through what you have.
A major top management rejig, but an expected one at that, after HDFC's merger with HDFC Bank, with the bank CEO Shashidhar Jagdishan saying these changes were made to bring in a sharp focus to leverage what the bank has built as the runway for growth is large. Now, one of the biggest change comes in the form of a dedicated head for the mortgage business, which now forms almost 35% of the loans after the merger. The former head of retail assets, Arvind Kapil, is going to be spearheading it. Arvind Vora, who was previously looking at retail branch banking, will now head retail assets. Second, HDFC Bank veteran Ashish Parthasarathy is going to take on the responsibility for retail branch banking in addition to treasury. But importantly, the retail branch banking business itself has been split into two according to various regions and will be driven by Smita Bhagat and Sampat Kumar, who will report into Parthasarathy. This is important because while HDFC Bank already has about 8,000 odd branches, it is looking to add 2,000 more every subsequent year. Now, third, in what is a clear step towards a bigger digital push, HDFC Bank's entire IT and digital function is going to be consolidated, report directly into the CEO. Ashima Bhatt has been tasked with creating a bank within a bank, which will essentially serve as a virtual relationship channel to service customers who may not necessarily need a physical touch point and help the bank meet its objective of creating a new HDFC Bank every 4 to 5 years. A new Chief Digital Experience Officer post has been created, a dedicated head for creating banking as a service, and all consumer-facing digital products are now going to be run as direct-to-consumer digital businesses with their own separate P&L. There are other changes as well, but overall this means a sharper focus on retail and a bigger role for all things digital at HDFC Bank.
Ritu Singh there with all the details, and we'll keep an eye out for HDFC Bank because it has been one of the top contributors to the Nifty 50's downside. Let's slip into a break. Up next, we get you cues from the commodities market. Stay tuned. Welcome back. You're watching Power Breakfast right here on CNBC TV 18. Let's get you now cues from all the commodities action. Manisha Gupta is joining us with all the updates. Morning, Manisha. The crude prices are recovering from a 3-week low. What else are you picking up from the commodity space?
Oh, well, absolutely. After 3 days of constant decline, we have seen some buying come back, and $91 a barrel seems to be holding right now. But that is majorly ahead of the OPEC meeting today, where the OPEC and allies are expected to keep the supply unchanged. But what the markets are also reacting to is the fact that the U.S. inventories in the previous week declined by 4.2 million barrels, and that tells you that the demand in the U.S. seems to be consistent. Apart from that, the support also comes in from statements where Saudi Arabia is expected to raise November selling prices to the Asian consumers, and this would happen for a fifth straight month that we are looking at hike in prices from the Middle East to Asia. So that is also supporting the markets right now. Having said that, $85 to $95 a barrel seems to be a range that most brokerages believe crude prices will trade within in the next couple of months right now. The fast decline, though, has been seen in case of the metal prices. So whether it's copper, zinc, aluminum, silver, all of this decline between 2.5% to 3.5% in the overnight markets. Asia has seen some opportunity buying, but markets would want to wait for more data and the Fed official statements that are also slated today for further direction.
Thanks a lot for that, Manisha. Markets would want to wait for more data is what the cues are coming in. Anil Agarwal also mentioned in an interview to us yesterday that he sees crude prices going up to as high as $120. So we'll watch out for that one as well. Moving on then, following the coordinated raids at nearly 100 locations throughout the nation on Tuesday, the special cell of the Delhi police detained Prabir Purkhayastha, the editor-in-chief of the web portal NewsClick, and Amit Chakravarti, the director of human resources. Police are now looking into claims that the portal distributed Chinese propaganda and received unlawful funds from China. Additionally, several of its consultants and staff are also being watched. And that's all we have on this edition of Power Breakfast. Bazaar Morning Call is up next to set you up for all the trading action today. Stay tuned.